What's new with ESG? That's environmental, social, and governance considerations. ESG looks at metrics that investors use to assess a company's environmental impact, social responsibility, and corporate governance practices. It's a way for investors to align their portfolios with their values. With concerns around climate change and social justice growing, ESG considerations are said to have gained significant momentum. In December 2020, Laurence Fink of BlackRock, a leading investment management corporation, said that climate change was becoming a defining factor, and BlackRock went on to update guidelines and global principles to reflect commitment to climate and diversity. Many even saw BlackRock as an ESG leader. But is there a shifting stance on environmental and social issues? BlackRock's voting record and public statements are said to have raised some eyebrows with its approach to shareholder proposals on environmental and social matters seeming to have changed over time. What about BlackRock? BlackRock is considered to be the world's largest money manager with assets totaling close to $9 trillion as of December 2022. Analysts believe it could go to 15 trillion by 2028. So, what's up with the ESG stance? BlackRock, which was launching ESG funds to help decarbonize the economy, seemed to have then changed its stance. It has suggested a short-term increase in fossil fuel output as necessary. Also, in May 2022, BlackRock stated that it would not support a majority of shareholder resolutions on climate change. Why? Because the resolutions were not seen as consistent with the client's long-term financial interests. According to a report between June 2022 and June 2023, the firm voted in favor of only 7% of such proposals. This is a drop from the previous years, when it backed 22% and 47% of them. Why could this be happening? One significant reason could be the growing scrutiny and backlash BlackRock seems to be facing from political circles. Critics, including some Republicans in the US, have accused the firm of promoting a woke agenda through its ESG initiatives. Republican-led states in the US are said to be banning ESG investing in public funds. This even led Laurence Fink of BlackRock. This even led to Laurence Fink distancing himself from the term ESG, which he believes has been weaponized for political gain. Or maybe it's not just political. The company was said to refuse backing resolutions that it deemed redundant, overreaching, or that did not have economic merit. For example, BlackRock in 2022 voted in favor of Amazon having to produce a report on its use of plastic packaging in 2022. However, it was said to vote against a similar proposal because it said Amazon had started to disclose information according to a report. Plastic packaging proposals were said to have garnered less than 33% of shareholder support in this recent period. So the theory is that if a company has already started disclosing certain information, BlackRock might not support a proposal asking for the same data. This may signal a new emphasis on maximizing shareholder value and long-term impact rather than a blanket support for all ESG initiatives. Or it could just be pragmatism. There was also a change in policy by the US Securities and Exchange Commission, which is the SEC, regarding ESG. According to this, US companies would have a harder time blocking climate change and human rights petitions from annual shareholder votes. This move could be seen as a win for environmentalists and other socially conscious investors who filed resolutions to pressure companies to reform their business practices. But does this make companies less happy about ESG considerations? Or is it facing some ruthless pragmatism to balance with financial interests? Is BlackRock being more balanced with the way it looks at ESG? BlackRock isn't alone in this shift. Other major asset managers, including State Street and Vanguard, are said to have also reduced their support for ESG resolutions. Are asset managers finding themselves at a crossroads between responsible investing and shareholder value? Could this be an ESG overhype correction? Is this even fair ESG criticism? As the world of finance grapples with the interaction of environmental, social, and governance considerations, a company like BlackRock could be a testament to the challenges and complexities inherent in responsible investing. What is the future of ESG?